to you, Tom. This BES story is a very specific story. Does that give us reason not to worry too much about this popping up elsewhere?
It may well pop up elsewhere. I mean, I think the starting point for all of this is as the asset quality review done by the ECB continues on, we are finding stuff across European banks. It's also fair to say, of course, that we still are not at the end of the BES saga. I still worry about the bad bank and what exactly is going to happen there, but we are at least making progress in Europe.
So markets would be wrong to assume this is a one-off without major implications for the wider Eurozone?
I think they'd be precisely wrong to think that, but remember the implications of the wider Eurozone are becoming slightly clearer. For a starting point, large depositors and senior bondholders are not being bailed in, as happened with Cyprus. We are told that any bank that fails from January 2016, senior bondholders will be, of course, bailed in. So there are perhaps fewer lessons here, but at least from Cyprus we've made some progress, but I still think there are probably more nasties in the accounts of European banks.
All right. But let's face it, we've got the stress test later on this year. That could throw some of those up, right?
Indeed, yes, and I think going on to the stress test, I mean, the ECB's mantra has been to European banks, if you think you're in trouble, raise capital before we tell the market that you're in dire need of it. So I think we can wait and see after September. We could see quite a few more banks rushing out to secure their balance sheets.
All right. Elsewhere, we've got the ECB, of course, this week. I mean, it seems like things are pretty quiet on the monetary policy front at the moment. What else is your focus this week?
Yeah, I think monetary policy is pretty much a snooze-a-thon for both the UK and the Eurozone. I think what interests us at the moment is some of the partial data. We're going to get out June industrial production for the UK and certainly for Europe. It's going to help shore up our Q2 estimates. We want to know if Q2 was better than the 0.8 in the UK. Certainly the MPC thinks so. If we get stronger IP, then perhaps they might be right.
I mean, what's your take on the UK economy? Word is that some of the confidence seems to be dipping a little bit, but what do you think?
Well, I think in history, sort of the June Mansion House speech by Governor Carney warning of interest rate rises this year now looks to be a little bit overtaken by the data, which has been a touch softer. We knew earnings growth would be weak because of base effects. That's not a surprise. We want to find out where we'll be in September as the April sort of data roll off. But it looks to be losing momentum. The one thing that could, of course, give it back, as we've had from all the UK bank results last week and this week, they're increasing their provisions for PPI. They're continuing to fund the UK consumer.
Brilliant. Tom, many